Welcome to the Straight Path Podcast, where we discuss all things financial. I'm Dan Cook, certified financial planner with Straight Path Wealth Management, and I'm joined today by Emrah Sero with Lake Michigan Credit Union. Emrah, thanks for being on the podcast.
Thank you, Dan. Appreciate you for having me.
Yeah, so you are a mortgage loan officer or originator at Lake Michigan Credit Union. So tell us a little bit about your process and what that looks like.
Yeah, so as you mentioned, I'm with Lake Michigan Credit Union, LMCU, mortgage officer. We help people finance their home. We help people build their home, or if they're looking to refinance or consolidate debt, we also assist with that. So my process is simple, but it's a little bit different maybe than other people do it in today's world with technology. I invite everyone to meet with me face to face to do a full consultation. And I believe that face to face meeting is valuable and beneficial, not only for me to learn about them, but for them to learn about me and our process. We love to get to know more about the client, the borrower, what their goals are, short and long term. And then in doing so, help building a plan to put them in the best financial position and lending position. So yeah, we love inviting people to our office and doing that.
Awesome. Awesome. Well, there's a lot of things out there on social media and the internet. It's similar to financial advice. There are, I won't say myths, but there might be some bad direction. And especially in the mortgage world, you hear different arguments, 15 versus 30-year loans. Now's not a great time to buy because interest rates are so high, and maybe let's just wait for interest rates. Do you have an opinion or some direction or guidance for someone who might be out there thinking, hey, I'm just going to wait to buy a house because interest rates go down?
Yeah, that's a great point, Dan. Just a brief kind of story. I came to the States in 1997. Since I've been in the States, nothing has ever gotten cheaper. So, and that kind of goes with what I explained to borrowers. I don't think homes are going to get cheaper. I think buying a home will continuously get more expensive. And so I think the best time to buy is now. And I do agree with you. There are a lot of myths on the internet. People go down the rabbit hole, whether it's TikTok, Google, whatever it might be, social media. You have to have perfect credit. You have to have 20% down, right? You can't have derogatory remarks on your credit. I have a bunch of student debt. There's a program, especially with LMCU, there's a program for everybody. Your first step should be to consult with a mortgage officer, mortgage lender like myself, to build a game plan. And then they will guide you throughout the process and put you in a position with what's best for you. I'm a big believer in the 30-year fixed, or a 30-year mortgage. But again, everyone has a different appetite, for that. But it all really depends on your entire financial picture. And that's what we take care of. That's what I take care of when I meet with someone face to face, or whether it's over phone or Zoom or Teams, is identifying some pain points and things that we could potentially work on to improve their situation.
Awesome. Yeah. And it's funny that you mentioned the 30-year, right?
Yeah.
So I am 100% on board with that too. It gives you some flexibility, some peace of mind. If you go with a 15-year, obviously the mortgage monthly payment is going to be larger, right? Interest rate sometimes, or most of the time, is lower if you go 15 years, correct?
Absolutely. Yeah, you'll definitely see a lower rate on a 15-year fixed. The 30-year fixed, you'll have the lower payment, but what you can do is you can do principal payments. Most loans nowadays, most lenders won't charge you a prepayment penalty if you pay the loan off prior to the maturity date. So I think it's something that everyone should consider. We can set you up with a 15-year payment schedule, right? You take a 30-year loan, but if you want to be aggressive and pay it off in 15 years or in 20 years, we can figure out what it takes to do that.
Yeah, and I read a stat the other day that 60 to 70% of the interest paid on a mortgage, a 30-year mortgage, is in that first 15 years.
Absolutely.
So if you are going to pay extra on it, you advance the amortization schedule, and essentially you're going to flip your principal payments to be more than your interest if you do it.
Yeah, that pendulum would swing.
Yeah.
Absolutely, for sure.
Awesome. You were talking about credit scores, down payments, some things like that. I'm sure PMI is something that comes up in
Yes,
topic a lot too with the
sure.
20% down. When people are looking to apply for a mortgage, is there a cutoff on the credit score when it comes to that in the amount that they can put down?
Um, are you asking like a minimum credit
Yeah, a
score?
minimum credit score,
Yeah,
minimum down payment.
so typically, credit score wise, as low as 575, that would be with the Federal Housing Administration, or
Mhm.
FHA. It's a term that people usually talk about, FHA. Minimum down for a program specific to that would be 3.5%, 3.5% down. Um, Again, you know, I'm a big believer in kind of laying everything out on the table, because that program might not be the right fit for the client. There's programs where we offer as low as 620 with 0% down, no PMI. So there's a lot of great programs out there. You have to make sure you're speaking to the right people. Be very upfront with them. If there are things you're struggling with financially, please let your lender know. Ultimately, we'll find out in one way or another. I feel like that process at times can be a little intrusive, because we collect so much data from you and so much personal information. But I mean, there's programs with 0 down, 1% down, depending on your occupation. But generally speaking, if you're going with a conventional loan, it's typically 3 to 5%, or FHA 3.5% down.
Yeah. And for anyone watching that doesn't know what PMI is, can you just give a brief summary of what that is?
Yeah, PMI is private mortgage insurance. So on a conventional loan, if you don't put 20% down, depending on the loan to value and several other factors, your PMI can range anywhere from $50 to $300. So obviously, if you have a very good credit score, or a low debt to income ratio, your PMI will be a little bit more advantageous versus someone that has a lower credit score and a high debt to income. So, um, but PMI should not be something that stops you from buying a home. I think it's temporary in most cases. PMI can be removed, whether you refinance, or you do updates to your home, or you have a large chunk of money down the road that you're going to apply. You can always request to remove PMI. On conventional loans, on FHA loans, typically the PMI will stay for the life of the loan.
And is there a certain threshold that you had to meet to get rid of that PMI?
On conventional loans, once you get down to 78%, it's automatically removed from the loan.
Okay.
Yeah.
So you don't have to refinance or recast or anything?
You don't, if you're just planning on making standard payments or your scheduled payments. A lot of times, what we've seen over the last couple of years is borrowers that are paying PMI have done, some updates to their home, and it's been more than 2 years. They have submitted a written request to remove PMI because market conditions, the value of their home has gone up, and we've been able to successfully remove that PMI for them as well without refinancing.
Speaking of
Mhm.
refinancing, let's talk a little bit and switch gears to that. When is it a good time to refinance compared to not, where the cost might not be worth doing the refinance?
Sure. So typically, the rule of thumb that I have is, you'd want to refinance if you can save at least one full percentage point off your current rate. Now, we've refinanced people where it was less than that, and that was because they've had other financial, situations come up where a refinance was warranted. So it could have been, a divorce. It could have been a cash out refinance. It could have been a death in a family, right? So things do happen in life where sometimes that 1% rule doesn't always apply. But one thing that I do is, again, it goes back to having conversations, is if the rate does go down by 1 full percentage point, but you're moving in the next year or two, those costs may outweigh those benefits. And I may advise you to just stay where you're at, because it might not make sense for you. But if you're planning on being in the home, 5 years, 6 years, we definitely would look at the numbers. We'll do a full total cost analysis for you, and tell you, hey, this is your break even point. This is where you're going to get the most bang for your buck.
Okay. Is there a cost to meet with you at all, or is that
Good
totally
question.
free?
Yeah, that's totally free. There's no cost. We obviously do have closing costs. So
Right.
if we originate the loan and you do close on the loan, yes, there's fees for that. But no cost to do a, in-person consultation over the phone or Teams or Skype, whatever your choice is. There's no cost to that.
Okay. Do you have any idea where mortgage interest rates are going to be going over the next 5-10 years?
Oh, that's the big question. I think in the short term right now, I think things will stay where they're at. Even Powell said that he doesn't know what rates will do. So I definitely think there's a lot of uncertainty. I do think that if you're looking at 5 to 10 years, I think the new norm will likely be rates in the fives, right? And so that's why, if you're in the market right now, I definitely think your biggest concern should be, or biggest obstacle should be trying to secure the home, because it is very, very competitive. And one last point on that is who you work with on the agent side, who your realtor is, and who your lender is, does definitely matter. It really, really does. So definitely do your homework on that.
100% agree on that. Yeah. Well, I have one last question for you. This is a little bit of a surprise I'm going to throw in for you. But
Oh boy!
are
All
the
right.
Detroit Lions going to win the Super Bowl this year?
Yes, I say that every year. I'm a big believer, die hard. When they were 0-16, I said they were going to win the Super Bowl the next year. So I have a good feeling. I think it'll be rough, but I think they'll pull it out.
You've been drinking the Kool-Aid a while. I think they're on the
Really?
track. We both have a little bit, but I think they're on the right track to get there. I feel like a couple pieces maybe still missing.
Yeah, I had more optimism last year than this year, but you and I have known each other for a bit. I've been drinking the Kool-Aid a while. So.
Well, Emrah, thanks for being on the show. That's all we have for today. Thank you for watching. Remember, when you plan better, you invest better, you get to live better. We'll see you next time on the Straight Path Podcast.
Free audio post-production by alphonic.com.